There is something great about seeing a dividend payment hit your account. I remember receiving my first dividend payment, and even though it was a couple bucks, it was the start of something big. After all, dividend investing is a long-term investing strategy. It takes time and it is a process. It starts off small, but once you receive that dividend payment and reinvest that money back into the market, you now have more shares. And now let's say next year that same company increases their dividend payout. Now you have more shares that are getting paid a higher dividend per share. And that is the start of the compounding process. Do this for a number of years and you can see how your wealth grows. And this is irregardless of how the stock price is moving. Your dividend income continues to climb without adding fresh money from your bank account. But let's say you do add fresh money to your bank account, and this will speed up that process even faster. Do not underestimate dividend investing and the power of compounding dividends. Far too often, new investors just look at the year one yield. They don't take into account share appreciation. They also do not take into account the power of compounding dividends. Dividend investing is a total return investment. So yes, seeing dividends hit your account is great and all, but what about seeing dividends hit your account every single month? In today's video, we're going to talk about 3 stocks, and we're not looking at monthly dividend paying stocks or monthly dividend paying ETFs. We are going to look at 3 stocks that will be having you earn dividends every single month. If that sounds awesome to you, do me a huge favor and click that like button down below, as that is huge for the growth of this channel moving forward, and let's jump into the video. Hey everyone, Mark Rusin here, and thanks for joining me today. I think you're really going to like what I have in store, as we will be talking about setting up a portfolio that will have you earning dividends every single month. But before we jump into the video, here's a quick word from today's sponsor. Today's video is sponsored by The Motley Fool. The Motley Fool has a ton of great products and tools for investors of all types. And right now, you could sign up for their top 10 stocks to buy right now by going to fool.com/Mark. Thanks again to The Motley Fool for sponsoring today's video. With that being said, let's take a look at this 3-stock portfolio that will have you earning dividends every single month. Dividend stock number 1 is Merck & Company, stock ticker MRK. For those of you unfamiliar, Merck operates in the healthcare sector, more specifically within pharmaceuticals, and they also have some exposure to animal health as well. Merck has a market cap of nearly $280 billion, making it the largest stock in our list today. Over the past 12 months, it has been all doom and gloom as the greater S&P 500 fell into a bear market in 2022 and ended the year down 20%. Not all was bad though, because as you can see here, Merck has had a nice run. Over the past 12 months, the stock has climbed over 35%. So what is driving all of this growth, you might ask? Well, it's been a combination of both organic growth, products they already have that continue to grow and expand their market share, and also inorganic growth, which they have brought in through acquisitions. One example is the acquisition of Imago, which has significantly expanded Merck's product portfolio in the cancer therapeutic space. The company has a number of great products and a loaded pipeline moving forward. But the largest product and revenue driver is their drug Keytruda. Keytruda sales are up nearly 30% year over year and could surpass $20 billion this year alone. The company's revenues were largely impacted by COVID, but shortly after that, it was a one-way ticket higher, as sales are now about to creep north of $60 billion. When looking at efficiency, you can see here that the company has a return on assets of 15.3% and a return on invested capital of nearly 13%, both higher than the previous year. Looking at cash flows, the company has generated $4.5 billion in free cash flow last quarter and $5.6 billion in operating cash flow, both up 15% year over year. Higher cash flows means more room for dividend growth. Speaking of dividends, Merck currently pays an annual dividend of $2.92 per share, which equates to a dividend yield of 2.7%. The company has a 5-year dividend growth rate of 9% and has increased their dividend for 12 consecutive years and counting. Dividends for Merck are paid out quarterly in the months of January, April, July, and October. Looking at valuation, you can see here from this fast graphs chart that analysts are looking for EPS of $7.47 in 2023, which is relatively flat but equates to a forward PE multiple of 14.5 times, which is below their 5-year average of 16 times. I think a great entry point for shares of Merck would be below that $100 mark in my opinion. Dividend stock number 2 is Caterpillar, stock ticker CAT. Caterpillar is the premier industrial giant within the machinery segment. The company has a market cap of $132 billion. Caterpillar is much more of a cyclical name. It will flow with economic activity or even politically driven. Caterpillar could benefit from the new Infrastructure and Inflation Reduction Act that has set aside $500 billion towards redoing many highways, roads, and bridges, which should be a continued tailwind for a company like Caterpillar. Over the past year, shares have outpaced the S&P 500, and they have done so over the past 5 years as well. We saw nearly a complete halt in infrastructure spending during the 2020 pandemic. But as the economy reopened here in the US, revenues have largely rebounded. CAT also does have exposure over in China. So as they look to reopen their economy, finally, they could also be a potential tailwind for the company moving forward to push revenues back to all-time highs. Caterpillar sells large machinery that will be needed to conduct a lot of the rebuilding that is going to take place across the country moving forward. Looking at efficiency and cash flows from the latest quarter compared to the prior year, you can see that things are higher across the board. Return on assets of 9.1% is up nearly 40%, and return on invested capital at 11% is an increase of 38% year over year. Free cash flow generated of $1.86 billion in the quarter is up over 60% year over year, and operating free cash flow of $2.5 billion is an increase over 40%. Again, this is another company that has been turning some strong free cash flow, which has led to a growing dividend. Caterpillar currently pays an annual dividend of $4.80, which equates to a dividend yield of nearly 2%. CAT has increased their dividend for 29 consecutive years, making them a dividend aristocrat with a 5-year combined average growth rate of 9%. Dividends for Caterpillar are paid in the months of February, May, August, and November. Looking at valuation, analysts are quite bullish on shares of CAT as they expect 10% EPS growth in 2023, and that EPS will be $15.33 per share, which equates to a forward price to earnings multiple of 16.8 times. And when you compare that to their 5-year average, shares look fairly valued. In October, shares dipped below $170 per share, which was a great time to add shares of CAT. If we see the markets retest those October lows, this is definitely a name to keep high on your watch list. Dividend stock number 3 is Broadcom, stock ticker AVGO. Broadcom operates in the semiconductor space. The company has a market cap of $243 billion. Broadcom is a name that has been in the news actually lately, not because of something they did great or because of an acquisition, but due to some comments made from Apple, who has used Broadcom chips for a number of years, and they are looking to wean off of those by the year 2025 and replace them with their in-house options that they continue to develop. This is something that the company has talked about for over a decade, so nothing new or surprising here. The semiconductor sector as a whole has been under heavy pressure over the past 12 months, with the VanEck Semiconductor ETF, stock ticker SMH, down 13%, to which Broadcom is actually a top 5 holding within that ETF. Broadcom, though, on the other hand, in terms of performance, is actually up nearly 10%, so it has held up its end of the bargain within the SMH ETF. With its broad portfolio, Broadcom is highly exposed to a range of fast-growing markets with significant long-term potential. They have one of the industry's broadest IP portfolios with over 17,000 patents in FY 2022, and the company continues to invest highly in research and development. Looking here, you can see the growth in various financial metrics, and this is roughly a perfect chart. Every single metric continues to rise from revenues to gross margins, EBITDA, and free cash flow. Revenues are higher, but EBITDA and free cash flow rising at a faster pace is very impressive and will continue to have the company being a great income and growth play moving forward. The company currently pays a dividend of $18.40 per share, which equates to a nice dividend yield of 3.2%. Shares of Broadcom has been a great dividend growth stock as they have a 5-year dividend growth rate over 20%, and they have increased their dividend for 12 consecutive years and counting. The dividends are paid quarterly, and they are paid on the months of March, June, September, and December. So everything looks great, but what about valuation? Analysts are estimating earnings per share of $40.89 per share in FY 2023, which equates to a forward price to earnings multiple of 14 times, making it technically a value play, being lower than the greater S&P 500 earnings multiple. However, in comparison to recent history and shares of Broadcom, the shares look to be trading in line with their 5-year average, meaning they look fairly valued. So there we have it, 3 great stocks, and as you see, they all pay quarterly, but Merck pays on January, Caterpillar February, Broadcom March, and you can see how that'll turn back over, and you will be earning a dividend every single month with this simple 3-stock portfolio. Down in the comments section below, let me know which of these 3 stocks you prefer in your portfolio. Do you like the likes of Merck in the pharmaceutical? Do you like Caterpillar as an industrial play? Or do you like Broadcom, which is in the semiconductor space? Again, if you haven't done so yet, make sure you hit that like button down below. Subscribe to the channel. I appreciate your support over the year, and we'll look forward to the next video. Take care.